Ladies and gentlemen, good day and welcome to the IPCA Laboratories Earnings Conference Call hosted by DAM Capital Advisors Ltd. As a reminder, all the participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Agarwal from DAM Capital Advisors Ltd. Thank you, and over to you, Mr. Nitin.
Yes, hi, good afternoon everyone, and a very warm welcome to IPCA Labs Q1 FY2025 earnings call hosted by DAM Capital Advisors Ltd. On the call today we have representing IPCA Lab management, Mr. A.K. Jain, Managing Director, and Mr. Harish Kamath, Corporate Counsel and Company Secretary. I'll hand over the call to Mr. Jain to make the opening comments and then we'll open the floor for quick Q&A. Mr. Jain, please go ahead, sir.
Yeah. Thanks, Nitin and DAM Capital for organizing this call. Good afternoon to all participants and thanks for taking out time and joining us for Q1 FY2025 earnings call. Today's call and discussions and answer given may include some forward-looking statement based on our current business expectation that must be viewed in conjunction with the risk that pharmaceutical industry business faces. Our actual future financial performance may differ from what is projected and perceived. You may take your own judgment on information given during the call. Our domestic formulation business for the quarter has delivered a growth of around 12%. If you look at external data, met June 24, IPCA is ranked as a 16th pharma company in IQVIA and it's the fastest growing company among the top 20 players as per May June 24. We have delivered market beating growth in both acute and chronic segment and that are recorded by IQVIA for Q1 25. Overall IPM in this period has grown by around 9% and IPCA has delivered growth of 15%. On acute segment, IPM growth was around 8%. We have growth of around 12%, and on chronic segment, IPM growth was 11%, and we have delivered around 20% growth as per IQVIA. The company continued to increase its market share. The Met June 2024, our market share has crossed around 2.01% from 1.91% in May June 2023. And for Q1 24, our market share has gone up to around 2.17% as against Q1 23 of 2.06%. So there is a clear gain of almost around 11 basis points. On export formulation business, there is a decline of 1% in Q1 25 from around 398 crore to 395 crore. We have faced major challenges in shipping, getting containers timely, and some of the challenges also faced on supply chain side that has resulted in decline in the business. On API business, we continue to face some challenges and in Q1 25, the business declined by 2% to 295 crore as against from 295 crore to around 287 crore. On margin basis, if you look at margin or standalone EBITDA margin for Q1 is 22.25%, is better than our guidelines of 21% for the financial year. Our consolidated EBITDA margin is around 18.52%, is also better than overall guidelines for the year at around 18% for the year. Improvement is in the margin are because of improvement in overall product mix, lower input cost as well as lower manufacturing and other costs. Income from operations, if you look at the company has delivered a standalone growth of around 5%. It is lower compared to our guidelines of around 10.5% to 11%, largely because of exports, what we have discussed above. We expect better growth in line with our projections for Q1 25 and also for the rest of the year. Consolidation results are not comparable as Unichem results are consolidated from the second quarter of the FY2024 Having given the broad numbers, then I would request participants to ask the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, on the gross margin front, firstly, on an ex-Unichem basis, there has been a very healthy improvement. Is this to do with lower exports? And so if as the exports scale up, would we see some rationalization of gross margin going forward?
Let's say export also we have good margins. So it's not that except the UK where the margins are little lower, but all other markets also we have got good margins. So the reason for overall.
Understood. So this kind of gross margin is sustainable for FY25 per se?
If you look at it, the only factor which is there is that we have lower gross margin on API side, and API business has not grown. So to some extent, because of this product mix also, there is margins could be better, but it's largely because of product mix improvement and also because of lower input cost, and also our operating costs remaining in control.
Understood. And exports, sir?
If you look at our manufacturing and other expenditure, that has grown by just 2%. Yeah.
Right. And on the exports?
Employment cost may be around 9%. Yeah.
Yeah. Sorry for that, sir.
Yeah.
So secondly, on the exports also, do you see revival happening soon, or this logistics issue might, prevail for a couple of quarters?
Logistic issue will take some more time because the ground situation has not improved yet. So those issues will continue for some more time, but export certainly will improve. I think the major setback in this quarter we have faced was mostly one particular geography, Australia, New Zealand, where the business has gone down by almost around 40 crore. So that is the major one, which is by and large is relating to some supply chain on the API side that got little issues. So we are not able to manufacture those kind of products. The supplies may come maybe in this quarter. So that may start happening again on the third quarter onwards from that market. So that was one major challenge we have faced during this quarter, and some export shipment also got little delayed in the market because of the shipping issues.
Understood. And lastly, on API side, sir, if you could just share what would have been the volume growth and the price erosion that would have happened in the quarter?
Erosions are now very limited. Price erosions were there, but now it's very, very limited. Now it's not maybe 2-3% here and there, but price erosion trend has stopped now. And I would say that input cost is also not moving up to that extent. There is a marginal improvement here and there in solvents and others. But by and large, your material costs are also very stable. Yeah.
Understood. Thank you. That's it from my side.
Thank you. The next question is from the line of Ayan from Nomura. Please go ahead.
Yes, sir, good afternoon. Just wanted to understand, the issue on export formulation and API. You highlighted supply issues. So the guidance that you had given end of last quarter with respect to API, delivering 6-7% growth and generic also double-digit growth. How should we think about that given this uncertainty and how much it can be recovered for the rest of the year?
Yeah, our guidelines was around overall guidelines, if you look at, was 10.5% to 11% growth for the year. And I think second quarter we will certainly deliver that kind of growth. And going forward, also that kind of growth will come, but I think whatever deficiency has come in the quarter, that's very difficult to bridge. So overall for the year, there could be overall growth of around 9% or so, broadly.
Okay, understood. And on Unichem, if you can update on the progress that you've seen. We've seen improvement in gross margins, and the overheads have remained largely flat. So how are you thinking about the progress there, and what the synergies that you mentioned both on the revenue and the cost side? Where are we with respect to realizing those? And if you can give some color on the future here.
So on the top line side, I think there is marginal pressure on the pricing, so it's not very high. Even looking at that also, the overall there are gross margins has improved because we could substantially reduce the lower pricing on procurement side, and the advantage we could extend for the overall combining the volumes of procurement of IPCA and Unichem put together and then negotiating the prices. So our price negotiation is far more improved. There are certain operating efficiencies has come in their operations, and that is also resulting in the overall better margins margin side. And on utility side, they have further improved the cost on utilities, and therefore their manufacturing other expenses have not grown in line with overall business growth, and also that also savings has come. Some of the intermediates, they could reduce the cost of productions, and I think that's going to be commercialized in next few quarters, so that advantage will also come. And as far as other objectives of market extensions are concerned, there is every month reviews happening, and a lot of work are happening on that line. But it's maybe I think those advantage would come in the I think maybe around 1.5 years from now. Nothing is going to come very quickly because a lot of work are happening. Those are compilations are going on. They will be filed with the with regulators, and once they review and whatever their queries are there, that's replied. Only after then we will get the approvals, and then marketing preparations will happen. So it's a 1.5 to 2 years kind of journey. So that work is continuously going on for extending products to the various markets, whether it's Europe, whether it's a market in Latin America like Chile, or whether it's Australia, New Zealand, or those kind of Canada markets. So everywhere those kind of work are happening. So that's a little longer term, and that is what will give the real advantage once those benefits start coming in. On API process reduction side, also a lot of work is happening, but again it may take 1.5 years time for that to reflect in the results. So right now it's basically all low hanging fruits. That is what we could like say operating efficiencies, purchasing efficiencies, and their shipping cost. I think earlier they were practically almost around 60% of their volumes were going through air and 40% by sea for US market. So that has been reversed now. It's only 17-18% is now going by air. But in spite of that, their freight cost has moved up in this quarter, is largely because sea freight has also gone almost around 3 times. So that has but overall maybe I think in time to come those situation will ease, and I think what operational efficiencies which we have built up, that will bring even shipping cost in time to come down. So that will further add to the overall profitability of Unichem. Yeah.
Okay, sir. Thank you. I'll join back.
Yeah.
Thank you. The next question will be from the line of Shiva from Purnartha Investment Advisors. Please go ahead.
Hello.
Yeah.
Yeah. Thank you for the opportunity, and congratulations on strong margins that were posted. My first question is with respect to Unichem. For the full year, I just wanted to understand, obviously Unichem posted a great number last year in generics. So the base has been a little bit on a higher side. And the first quarter, as you pointed out, one was the logistics, which is pulled down. But on an overall level, how do you see the environment of generics in USA per se, and how do you look at the full year for Unichem?
There are not much of pricing pressure. It's only marginal pressures are there. But otherwise, let's say the US is a good market, and we are not seeing that kind of bloodbath now. So it's better time for the generic business overall.
And the demand outlook is strong. How are you, do you feel there's a double-digit potential growth, or how do you look at the overall growth?
It's possible to achieve double-digit kind of growth for us, yeah.
Okay, helpful. Okay. And with respect to MR, obviously we've added substantial amount earlier. Just wanted to understand what was the productivity of the MR for the full last year, and what is the current strength, and how do you look at the productivity for this year as a percentage of the, not the exact number, but what kind of improvement are we looking at?
So we have close to around 6,500 MRs right now. Last year maybe around little less than 6,000 around that time. And some more MRs are being added now, because one more division on pain we are starting now. It may be around next 2 months time that division will be launched in the market. So in overall productivity, I think around the first quarter last year we had a productivity of 4.21 lakhs. And current year first quarter it is around, I think, 4.52% kind of 4.52 lakhs as a productivity per man. So there is a significant improvement from 4.21 to 4.52 lakhs per man per month, in spite of overall increase in the field staff.
Thank you very much. Ladies and gentlemen, before we take the next question, I would like to remind the participants that you may press star and 1 to ask a question. The next question will be from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. Sir, you mentioned the shortfall on the export side, which you have seen in one quarter, that might not be bridged. So how do you see the overall export growth for the market, and in terms of profitability at the consolidated level, what are your expectations for FY25?
Overall, I think top line growth, our earlier projection was around 10.5 to 11. That may remain around 9% for the whole of the year for the company. I'm talking IPCA as a standalone, and as far as profitability is concerned, I think that it's going to be better than what we have initially projected. So what the earlier guidelines we had given last year was for the Q4 around that time was the profitability of around 18.5% overall. We have consolidated margins we have guided, and overall EBITDA for the standalone was guided around 20.5 to 21. So there are possibility of further improvement in that, because our current quarter margins are better, and second quarter is the much better quarter, so it may further exceed that, and overall margins are maybe around half a basis point to 1 basis point. It will be higher than what guidance we have given earlier.
Okay, that's helpful, sir. And my second question is, if you can update us on your advancement in the US market, in terms of how you're advancing in supplies or in filing for the market. Like, I understand it's slightly longer term to scale up, but nonetheless, if you can talk about the progress which you have seen so far.
So currently we are, I think 2 products are launched already there, and I think in this balance period of current financial year, at least 3 to 4 products will be commercialized more. So around 5 to 6 products will be launched in current year, and then next year maybe another 6 to 7 products may be launched. So overall next 2 years, I think we should reach to around 12 to 13 kind of products in the market, yeah.
Okay, but these should be helping at least in better utilization of your US plants, right? Although like sales will come maybe later on, we'll see better sales later, but at this point of time you are utilizing plants better, and that might be
better, and that will also improve the overall profitability, because most of these products are from captive consumption. So practically everything is from captive consumption. So our API plant utilizations and our formulation plant utilization both would be, and that will add to the overall margins also.
So, sir, 12 to 13 launches in next 2 years cumulatively. And what's the update on the filing part? Are you filing new products or on the existing ANDAs only you are trying to update the dosages?
Last 10 years we have not worked on US market, so there is no pipeline for filing in IPCA as far as so that pipeline is building now. So and it takes time. So a lot of bioequivalence studies and other things are going on. So once we file, then we will start updating. But still, I think maybe 6-8 months away from filing anything new.
Okay, sir. That's helpful. Thank you, and I'll get back in touch with you.
Thank you very much. Ladies and gentlemen, in order to ask a question, you may press star and 1. Ladies and gentlemen, I would like to remind you, in order to ask a question, you may press star and 1 now. As there are no further questions from the participants, I'd like to hand over the conference to the management for closing comments.
Hi, we have nothing to add. So, if there are no further questions, we can close this con call.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.